I'm Bridget Stomberg.
And I'm Lisa DeSimone.
And this is Taxes for the Masses.
Today's episode is on the 2025 Illinois Tax Symposium.
In September of 2025, tax professors and professionals descended on Chicago, Illinois to discuss the latest tax research. In today's episode, we highlight 2 research papers presented at the conference. Hello, Lisa.
Hello, B.
It is fall.
It is.
We are teaching.
Yes, we are.
How is your semester going thus far?
It's going fine, but I'm tired. I'm just tired.
Okay.
And it's only September.
I was gonna say that's not great.
It's not good.
Okay.
It's not good. I know I have another solid month probably of things just being really busy between service, teaching, and research. It just piles up and it's nonstop, and I have no time to myself, or at least that's the way it feels.
Heard and understood. Yes.
Yeah. Yeah. You feel the same?
I do. I do. I will say somehow I'm not totally drowning. I never totally drown at the beginning of the semester because this is when I teach corporate tax, which I've taught more than I have taught accounting for income taxes. So I have a better baseline here.
Sure.
So I will start to feel worse in November. But my students are great. I will say the upside of the semester so far is I'm letting them use GenAI unfettered access on their cases.
Yeah.
And I will say that as of today, I know we'll get there eventually, but as of today, I'm not worried about us losing our jobs to the robots. Just yet.
Okay. You are underwhelmed by the work product of the robots.
Yes.
Okay.
So our truest tax nerds will get this, but they had a case on corporate formation the other day, and one group had to say to it, did you want to talk about Section 351? Like, was that something that you thought might be relevant to this discussion?
Oh,
ChatGPT?
Good. Yeah. Mm-hmm. Nice.
So, that's that.
Well, today we are discussing the Illinois Tax Symposium, which is one of many recent conferences that only one of us has made it to, and actually neither of us made it to this one.
Correct.
We're kind of falling off the ledge here.
We really are.
And I don't think it's on purpose. I feel like I have a good excuse. What was your excuse?
Just you were talking about a minute ago, just too much admin, too many admin-y type things to do.
Yeah.
And you?
My brother-in-law got married.
That is a good excuse.
Yeah, it was a beautiful wedding in Nantucket, and we spent most of the week there because there were a lot of family events. And so, yeah, I could not be in 2 places at once.
No, it is not possible. And that I will mark that as an excused absence.
Oh, thank you. I appreciate that.
So today, you and I are going to talk about the conference, I guess, in theory, since we weren't there.
Yeah, sure. That makes total sense for us to, summarize the conference for everyone, given that we didn't attend.
Sure. So that's what we're going to do.
Great.
And then you're going to talk a little bit about a working paper, a research paper you had that was presented at the conference, obviously not by you.
Obviously not by me. Yep.
And then we're going to welcome a guest, Shannon Chen.
Oh, I love Shannon. That'll be great.
And she is going to talk about a working paper she has that was presented at the conference. So we're going to get our research update after we just talk a little bit in theory about what we think the conference could have been like had we been there.
Okay, the conference would have been great. We would have enjoyed seeing the papers and the discussants and all the participants. But really, what we would have looked forward to is that we would have had a weekend in Chicago together to go do the spa and the good eating and the shopping and the spying and the eating and the shopping.
All the things. Thankfully to the conference organizers, even though the conference is put on, we should clarify, by the University of Illinois at Urbana-Champaign. They do not make us go to Urbana-Champaign. They allow us to go to Chicago.
Yes.
And they always have the conference at a hotel that is, smack downtown. So you're close to really great restaurants, really great shopping. It's always a really wonderful balance of both conferencing and fun outside of the conference setting. So that's what we would have been doing. Another thing that I like a lot about this conference, and I think we've talked about it before, is that they have both academic and practitioner discussants, which is a unique thing, and I love that. And So I like these conference episodes. I like episodes where we have guests, and this is
Yes.
sort of hitting both of those. But I know that there's something that you don't like about these episodes.
Oh, okay. Do tell. Do tell me what I do and don't like. Yes.
I'm happy to do it. I think that they're a little hard to edit because we sometimes ramble too much.
That is true. Yeah. Yeah. And sometimes it can be hard to edit the speakers or the guests that we have on, and we don't always do it in the right order, right? We'll have the guest on and then we go back and we talk
Yes.
about the intro section of our podcast, and then so it's a little harder for me to edit. It takes a little more time.
It is, and once you get people started about their research, it's a really wonderful thing. But like a lot of times, they don't like to stop
Yeah, that's true.
because they're really excited and they have lots to say. So, in the interest of being a helpful co-author, I have thought of something to help you out.
Oh, okay.
So I'm identifying a problem and I'm coming with a solution.
I love this. Great. Keep going.
I'm going to give you 2 minutes to talk about your paper.
Okay, set the timer. I'm going to see if I can fill 2 minutes.
Literally. Okay. I was going to say 90 seconds last night, but then I thought that's not fair. Okay.
Maybe we shoot for 90
to
seconds.
120 seconds. Okay. Are you up for the challenge?
Do I need to pull up the paper? Because I don't remember the title of my paper.
Okay. So how about this? I will say the title and the names
Great.
of all your co-authors, and then
Amazing.
we'll start your 2 minutes.
Done.
Okay. Excellent. Do you need water?
I have water.
Do you need tea?
No.
Do you need cheese?
I always need cheese.
Just
What
trying
are
to
we
make
doing
sure-
here?
Just trying to make sure you have everything that you need. Okay.
Okay.
All right. So in between 90 and 120 seconds, you're going to tell us about the real effects of earnings stripping rules. We're going to talk about stripping, apparently. So this just got a lot more
Oh
exciting.
my gosh. We are so mature,
I am.
sophisticated,
Just
and smart,
trying to
and
keep
take
it-
things seriously. Yes.
Trying to keep it spicy. And this is co-authored work with Henning Giese, Reinhold Koch, and Christoph Rural. Take it away. I'm hitting start.
Okay, so first we need to understand what earnings stripping rules are, because this is what we're looking at in our paper. And it goes back to the notion that within a multinational group, you can strategically place your intellectual property and other things in order to shift income from high tax jurisdictions to low tax jurisdictions. This earnings stripping rule is intended to help prevent companies from putting debt in strategic places. So you basically have a low tax affiliate of a group who gives a loan to the high tax affiliates, and that loan allows for that interest to come out, that interest expense to come out of those high tax jurisdictions and be reported as interest income in low tax jurisdictions, which saves taxes overall for the multinational group.
Gotcha.
So there are these rules in place, and there are different ways, different countries have different ways of doing it. But one way of doing it is to look at the amount of interest deductions that you get and cap it based on the amount of profits that you have in the company.
Okay.
And so as you have fluctuating profits, you have fluctuating ability to take advantage of that interest stripping, that earning stripping via interest, because it's going to limit your interest deductions.
Okay.
And we posit that this won't just impact the amount of debt that firms take on, but it could also impact other things like the amount of risk taking that they engage in. And I'll explain that in a second. Their amount of investment, their growth, and possibly even their financial health overall.
Okay.
So that's generally what we look at. The reason we think it could be related to risk taking is that risk taking can make your profits more volatile over time,
Yep.
because some bets pay off and some don't.
Absolutely.
But that volatility is going to really impact on a year-to-year basis in kind of unpredictable ways how much of an interest deduction that you can get if that deduction is tied to your level of profitability.
Yep.
So that's basically what we look at. And we find that, yes, companies tend to reduce their debt if they're close to that threshold of how much they'd be able to deduct. But it's not just their debt. It also impacts their risk taking. So we find evidence of less risk taking by companies after these rules get into place. And that could have follow-on effects on level of investment, level of innovation, growth over time. And we do, in fact, find all of those follow-on effects. How am I on time?
You're at 2 minutes and 26 seconds.
Oh, well, okay. I failed. I failed you all. I apologize.
But it was interesting, and you did have to explain earning stripping, and it
Yeah.
wasn't nearly as exotic as it sounded.
No, it's not a trip to Vegas. No.
No.
It's, yeah. I mean, it's exciting to us, but possibly less exciting than a trip to Vegas.
All right, I will give you your remaining not remaining because you used it all up. Because I like round
Yeah.
numbers, I'll give you another 27 seconds. Is there anything interesting or some big policy implication about the paper that you would want people to know?
Well, I think it's important to point out that there were good intentions of these earnings stripping rules.
Yeah.
And I'm actually totally fine with companies having to take on less debt as a result of these rules, because I'm a little worried that tax incentives cause over leverage to begin with. So that doesn't bother me. What bothers me is that if firms are less willing to, invest in that next new innovative project, that's really going to potentially hurt long-term economic growth. And these effects are not systematic across all firms. Some firms are much more heavily impacted by these rules than others. So there's also kind of an equity issue here as well. And I think both of those factors are important when we're designing tax policy.
Yeah, when you were talking, the macro element of this came
Yeah.
to mind very, very quickly. So I think that's both of those things are very logical things to be concerned about.
Thank you.
All right, so we're going to welcome Shannon. I guess the only question I have remaining for you is, are we ever going to see each other at a conference again?
We're going to be in Hawaii together. I mean, that's a pretty good one.
Oh,
That's a pretty
yes.
good one.
Oh, okay. You just made my day.
You're welcome.
Today, we welcome Shannon Chen to the podcast. Shannon earned her undergrad and master's degrees from the University of Georgia and her PhD from the University of Texas at Austin. She is currently an assistant professor at the University of Arizona. Her work focuses on various aspects of taxes, and she has published papers in both the Accounting Review and the Journal of the American Taxation Association. Shannon, welcome to Taxes for the Masses.
Oh, thank you. Thanks for having me.
It's good to have you on.
It's great to be here. I always recommend you to my students. So hopefully they'll listen to this episode.
I was going to say, if this was a radio call-in show, you would be like longtime listener, first-time guest, because you've been with us since the beginning. I feel like you're a super fan.
Yes, definitely. I've already had students listen this semester to your podcast, and they've thoroughly enjoyed it.
Thank you.
We pay her to say that.
So thank you for being here.
So you recently attended the Illinois Tax Symposium in Chicago, and B and I are total slackers who were unable to attend. So tell us about the conference.
It was a great experience. I've attended this conference the past few years, and every year they bring together an excellent set of papers and excellent discussants. And then you would not believe the audience members and the number of comments and feedback and questions and suggestions that they have for the authors. I think this conference is particularly unique because they bring in discussants from practice and from outside kind of our tax accounting world. So it really gives us a new perspective on the research that we're doing.
It's awesome, but it's also a little nerve-wracking because it's like, is this person going to get up there and say I'm full of shit?
Yeah.
You always run that risk. So it adds a little spice, I always think.
Definitely. But they bring so much expertise in. One of the discussants was someone who'd been working, I think, at the DOJ, litigating tax cases. And as academics, we don't always have that background to work off of. So they just bring so much more institutional detail and knowledge to us.
So you were fortunate enough to have a paper selected to be on the program.
Mm-hmm.
So tell us about that paper. What is your paper about at a high level? And what I think our listeners, at least my student listeners, always like hearing is, how did you come up with the idea?
Sure. So our paper actually looks at whether public libraries increase tax filings and earned income tax credit uptake. So this project started while I was doing a research visit at ASU. And one of the co-authors on the paper has a family member who's a librarian, and just through discussions and conversations, they've talked about just the work that they've been doing and how it's even changed over the past few years and how many more library patrons are coming in and asking questions about everything from job applications to kind of administrative, kind of governmental related services. And so he had in the back of his mind that this is really interesting. There seems to be this information source out there that could have an impact on our world, taxes. And so we started exploring and looking at data that includes where libraries are opening and closing and seeing how that affects the actual tax filings in that zip code. And we do find that having this really awesome resource in the community is increasing the number of tax filings and the number of these credit claims.
Very cool. So let's back up, and I should have asked you this in the first place. Start, please, if you would, by telling us the title of your paper and who your co-authors are.
The title of our paper is Do Public Libraries Play a Role in Tax Filings and Earned Income Tax Credit Uptake? And I'm working with Roger White, David Kenchington, and Dimas Peña Romero at Arizona State University.
Very cool. I'm curious, what did you expect, like, before you got your hands on the data and before you ran any tests? What was your hypothesis? What was your gut, what did your gut tell you?
I thought that there could be an effect because libraries do offer so many resources, including actually some volunteer tax prep work. And so there's a program through the IRS called VITA, where volunteers prepare tax returns for low-income families with the goal of helping them claim this EITC credit. And having done that volunteer work before, I know it's often in different community centers and churches, but also often libraries. And so I thought there could be some impact. I didn't really know how to gauge what that magnitude of impact could be, if it'd be strong enough to see it empirically in the data. But given we're really narrowing down to zip code level data and looking at these changes in library access, I was pleasantly surprised to see that there was an effect. And, I was kind of persuaded too by some of this anecdotal evidence that, hey, I know librarians and they're telling us that they're dealing with these types of questions, and not that they're tax experts, but they are experts at connecting people with resources. And they're experts at learning technology and helping folks on the computer. And so there's even some survey evidence in the library literature that cites close to 40% of these kind of administrative questions that librarians are facing are about taxes.
Oh, wow.
That seems to be an area that if you're going to come in and look for this type of help, taxes are a big one, employment, applications, that kind of stuff is a big one, but taxes were by far the largest category.
That's fascinating.
Yeah.
Could you talk a little bit for our listeners about the connection between getting help at a library and the earned income tax credit specifically? So why was that a tax outcome that you thought you would see an effect of libraries?
Sure. So the earned income tax credit, which I know you'll have covered on your podcast, is geared towards lower income families who are working but need a little bit more help, especially those with families and dependents. And so we're really thinking about this population of taxpayers who might not have as many resources as other taxpayers. So libraries are an awesome free resource in the community that has these librarians who can help and have a lot of technology resources like laptops and computers, so that some could physically go in and file a return. So it's not just necessarily learning about the credit or learning about how to file your taxes, but it's the ability to also do that. And then, like I mentioned, they host these VITA programs. So if you're a frequent library patron, then you might be seeing these posters and announcements about, we have even free tax help available.
That makes sense.
It seems like, offering this resource seems important. That seems to be one of the takeaways from your paper, that libraries are a channel through which people can get the help or assistance or just the tools that they need to file their return and get that earned income tax credit that they need so badly. I'm curious, though, you mentioned you had data on library openings and closures. Are we seeing that there are more closures than openings? Like, what is the trend here? And is this, kind of a social policy issue that we should be aware of? Do we need more funding towards libraries?
Now, that's an important question. It's something we're thinking more about. With the closures, we do see a decrease in overall tax filings. But on the positive side, we actually don't see much of a drop in those EITC claims.
Oh, good.
And so, we think that result might imply that, once you do get in your pocket that EITC benefit, then you understand the importance of filing your return.
Yep.
And even if your library closes, you might still try and find ways to continue to file, because you can still go to a tax preparer and have to pay a bit for that service. But there are other ways once you have that knowledge to try and still take that credit. But maybe it's discouraging others who would file a return, maybe get some refund and not as big of a refund if they're not getting as much of an EITC benefit. Maybe some of those taxpayers decide it's not worth the effort if they're not required to file, to go find another place where they could file.
Right.
I was happy to see this paper because, as you mentioned, we have done, I think this is probably now our third episode on the EITC or related to the EITC. And one fairly recent episode was with the Comptroller of Maryland talking about trying to increase uptake. And so back to Lisa's point, it does seem like you are maybe uncovering another source that could either increase or decrease uptake. And that's essentially the availability of free resources to both maybe understand the credit and then also do what you need to do to claim the credit. And I really like the fact that this is like a no incremental cost. Like, a library is already serving the community, providing a lot of benefits. So it's not like you're building a library just for taxes. I don't think anybody would do, but it's like a nice ancillary benefit of that.
Related comment, it's actually a question. Do you all have your local library cards?
I have a virtual card that's on my phone, and I use our library all the time for audiobooks.
I use it all the time for Kindle books. Yep. Bridget is also nodding.
I am. Sorry. Yes, I have a child, and unfortunately my husband spends all of our book spending budget, our book budget allotment. I don't know what I'm trying to say. He spends too much money on books is what I'm trying to say. And so I am forced. This is not the only situation in our lives where he spends all the money and I'm forced to, yeah.
I have to. So I'm not one to often rise to the defense of your spend-loving husband. However, in this case, I have to say, like, the book nerd in me says there is no such thing as a budget for books.
Okay, my budget says different, but yes, yeah. he spends our book budget, and so I take my kiddo and we go to the library.
Got it.
Well, thank you so much for filling us in on the conference, which we were both sad to miss, and just for being a guest. This is long overdue.
And for telling us about your awesome research.
Thank you. I look forward to this episode.
And now it's time for the good, the bad, and the ugly. And I'm going to say it was really nice to not only see you, but to see Shannon and to hear a little bit about how the conference went.
Yeah, I don't think we've mentioned this so far, but we actually overlapped with Shannon in the PhD program. I can't remember if it was for 1 or 2 years.
I think it was 2.
I think it was 2. I know that she wound up inheriting a lot of my furniture when I left Austin.
Oh, very nice.
And then she gave that away too. So I had like a rug and a sofa, I think, that was serving like 3 generations of UT Austin PhD students.
She inherited my roommate.
There you go.
So we each contributed something to her living situation.
People and places for them to sit.
Yes.
And yes, we did say it to her, but Shannon has been like a dedicated follower of the podcast since the jump. And so we are very grateful to her for that. We both have co-authored with Shannon.
Yes, we have. And she's a very, very good co-author. Yeah.
She is. She's one of those people, maybe I know that I appreciate someone who quibbles about the detail.
Yes.
And
yes.
So Shannon, much like myself, is very into the detail and making sure that everything is very precise and very accurate. And I appreciate that about her.
That is the number one characteristic that comes to mind when I think about Shannon as a co-author, is just how nicely in the weeds and careful she is with the data and what we're doing with the data. Yeah. Which is super important for the person who's operating, who's manipulating all the data on a study.
Yes, I trust her completely
100%
with the data.
Yeah.
The other thing I really appreciate Shannon, and this is again something she and I have in common, I feel like she has a very reliable BS meter. And she won't work on a project if she doesn't think it's a real thing.
Right.
So, and I think that came through in her talk today when she was saying she was like kind of comforted to hear that there was anecdotal evidence in that library survey to sort of help triangulate their inferences, because I feel like she has integrity in that respect. Like, she would not want to be involved in a paper if she didn't think that the outcome was real, if she thought it was spurious.
Mm-hmm. I agree with that. Yeah. On to the bad.
Obviously, it's that not only did we miss each other, we both missed the conference, and I just find
the spying and the shopping and the eating.
Shopping. Yes.
Mm-hmm.
And I feel like I'm getting further away from the research part of it.
Yeah. Mm-hmm.
Which is sad.
That's what happens with all the admin stuff. Yep. Yeah.
Ugly.
I mean, I think you just said it. Like the problem with getting more senior, which seems very strange because I feel very young and I feel like we have just entered this profession, and yet somehow we are now relatively senior professors. And the problem with that is that, the more senior you get, the more you get asked to help run the school. And that takes time away from teaching and from research. So
run the school, run the journals.
That too, yes.
Yeah.
Mm-hmm.
Yeah. I'll also say it's ugly that, like you said, all the things happen at once. Like, I definitely feel like there are more feast and famine times in this job. And this is a time when there's just people are wanting all the things from all the different directions. And so, it's not possible to keep everything going.
It was, they say tenure is a tax. Richard Sansing says tenure is a tax. And I get it now. I didn't get it at first because to me, the tax of pre-tenure was the stress and all the time that you had to spend worrying about getting tenure, and you had a clock and you had to get stuff done within a certain period of time. But people, for the most part, left us alone to do that. And now we are not left alone to do it. That is the tax that tenure has. Yeah.
To any PhD students listening to this, when they tell you that your PhD program is the most time you will ever have, believe them.
Yeah, believe them.
Just believe them.
Yeah. Yeah. And don't graduate early like these two idiots did.
Dumbasses. No, don't do that. Don't
terrible
voluntarily take a year off your tenure clock. Don't do that.
Yeah, not a good idea.
But that's okay.
Good.
Well, good to see you. Good to see Shannon.
Yes, very nice.
And may you survive the rest of the semester.
And you as well, my friend. Well, that's all we have time for today.
Be sure to join us for more tax nerdery on future episodes of Taxes for the Masses.